Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Monday, June the 17th, 2013, and here is today's After the Bell market summary brought to you by WallStreetTrading.com. Want to first start off by saying I hope you guys had a great day today. A lot of interesting movement in the markets today, providing some great opportunities. We had that little news come out around 2 o'clock, which caused a little bit of selling pressure. But, we got some good volatility in the markets here, so you definitely want to make sure you're taking advantage of that. Before I get into the charts here, I want to let you guys know as well that we're just about done completing our new education course. Has a lot of great stuff in it. Definitely, if you're interested in learning more about tightening up or tuning up some of your trading techniques and strategies, you definitely want to make sure that you tune into this education. If you're a new trader and you're interested in joining our prop firm, you want to make sure you contact me at ccooper at wallstreettrading.com. A lot of good stuff, guys. You want to make sure you get involved here. All right, so let's go ahead and take a look at the SPY daily chart starting off. Actually, let's go and take a look at the markets first here. The Dow Jones closed up a little over 109.5 points. The Nasdaq closed up over 28.5 points, and the S&P 500 closed up a little over 12 points. If we take a look at the breadth on the market today, we had 4,047 issues advancing on the NYSE, Nasdaq, and the AMEX. We had 2,073 issues declining on the NYSE, Nasdaq, and the AMEX. So breadth was in favor of the bulls, just about close to a 2-to-1 ratio there. So that's something to keep in mind that we'll be tracking going in to the rest of the week there. So taking a look at the daily chart now, SPY closed up $1.26, up 0.78%. One thing that I'm starting to notice here is that we're not going anywhere. We're just trading in a sloppy range here, above and below this 165, not 165, but 164 level. That's a key level you want to work off of. If we can hold above 164, that'll be bullish. If we hold below 164, that'll be a little more bearish. But 164 is kind of like the key level that you want to be watching going into the rest of the week here. All right, if we break over today's highs on the SPY, which is 165.22, we'll be looking for a move up here towards 165.45 or 165 half, call it. We break over 165 half, we'll be looking for a move up towards these 166 30s. If we break below today's lows, well, then we have yesterday's Friday's lows to worry about right there to act as some type of support, 162.88. We break below that, then we'll be looking right back down at that 50-day simple moving average, exponential moving average that has been holding on the past two test of that those key moving averages there. They've been holding there, so keep that on watch. Let's go ahead and take a look at the ES. I want to show you guys what I'm seeing on the ES here. Nothing too crazy in the ES. The ES, the same thing, chopping around like the SPY, obviously. We are keeping a close eye on that key trend line that we have down here. All right, that is acting as support along with these 50-day simple moving averages. And then we're watching this little key trend line right here. As you guys know, this week, starting tomorrow, is going to be a big week. We have the Fed FOMC meeting that starts tomorrow and then ends on Wednesday. So you better believe that everybody's going to be paying close attention to the language of the Fed, of what they have to say, and some of the key information that they're going to be giving out regarding the QE, quantitative easing tapering, that's been on the headlines, as you guys know. So ES, same thing here. We're going to be watching this little key trend line. Has this key trend line down here, little compression pattern going on right now, tightening up, and we're going to be looking for a breakout of this pattern, whether it be to the upside or whether it be to the downside. You better be prepared for some type of big move. I would assume that's going to happen here in the next day or so. All right, so let's take a look at the triple Qs, the NASDAQ 100 ETF here. Got a nice little bounce off the key trend line that we've been highlighting in our videos. That trend line comes from back here from last November, December, rallied all the way up, all the way back up. And you can see why, again, like I preached to you guys, it's important to keep key trend lines in your charts because they come into play later on during the trading of the stock or ETF, whatever you're looking at. Later on down the road, they can come and play come into play. So therefore, you want to make sure you keep an eye on them and keep them on your charts. And if they get in the way because you have a lot of trend lines, well, just hide them, and then you could, of course, bring them back up when you need to see if it's coming close to that key trend line. Because sometimes some people don't like to keep the lines in the charts because it clutters up the charts. But you rather have a cluttered chart, or you rather make sure you're getting in at a higher probability area. Me, I rather make sure I get in at a higher probability area. And if the line's clogging up my charts, and I just hide it and then bring it back when it makes sense to. But anyways, keep an eye on the triple Qs here. Triple Qs closed at 72.98, closed up 70 cents, up close to 1% there. Same thing as the SPY, this nice little downward trend line of resistance, and we have this nice little trend line we could draw right here. From this lower, just in general, it comes from the key trend line that I just highlighted to you guys. So another compression pattern that's forming right here, and if the trend is up like it has been, you would have to assume that this could break to the top side. But then again, if that does not happen, we could get a fast move to the downside. So you want to be prepared for either scenario, and you want to have a watch list for maybe some stocks that you want to buy and some stocks that you want to short. And I have a couple stocks I'm gonna bring to you guys' attention here near the end of the video, and show you got a couple stocks that we've been tracking, that we're looking at to see if they're going to get another leg higher or another leg down. So we'll take a look at some of those as well. Let's go and take a look at the IWM, the Russell 2000, the small caps, a good index to watch if you're looking to measure risk. All right, the small caps are a good gauge of risk in the market, if you guys didn't know that. And the IWM is pretty much the same thing here, trading in a range between 96 and 99.25. Nice little consolidation range here for 1, 2, 3, 4, 5 weeks now. If we get a break over, say, 99.50 and hold, we could maybe try to make a move back up over 100. You can see the moving averages are trading sideways, pretty much telling us there's no trend right now. And you can see the chop action that we've been getting, the back and forth action, which has been providing great volatility to participate in. Good for us intraday traders, but if you're a swing trader or a short-term trader, you're probably looking at your portfolio doing a lot of up and down action there. So IWM over 99.50 and holding looks pretty good. If it breaks below, I would say 96 and starts holding below 96, that's when we'll have to be a little bit worried. In the meantime, it's just trading sideways. All right, let's go ahead and take a look at the volatility index, the VIX. Okay, the VIX has been holding these elevated levels that we're not normally used to, above this 16. If we continue to hold above 16, well, we're not normally used to it. We haven't been used to those price levels in the VIX since back here in December or September of last year, when we had this nice volatility in the markets. And now every time the VIX has been popping up, they've been selling the VIX down. Every time it pops up, they sell it down. Pops up, they sell it down. Pops up, they sell it down. And this time, it's actually been holding a little bit of a bid. All right, that may change on come Wednesday on the last day of the Fed FOMC meeting, if depending on what's going on with this tapering action. Because really the VIX has been moving up just because all this recent talks about the bond quantitative easing, a little bit fear has been coming into the market because of those rising interest rates that we've been discussing ever since we told you guys about the bonds starting to lose some of their steam, and those rates have been creeping higher. That's been in the news, in the headline lately as well. Plus the stuff going on with Syria and overseas and Turkey. So there's been a lot of stuff that's been causing these elevated levels in the VIX, and if those headlines and those type of headlines continue to come out, well, we could see the VIX hold a high bid, maybe even try to move higher, depending on the circumstances of those those different situations we have going on out there right now. So keep an eye on the VIX holding above 16. You got to be a little bit cautious, but if we break below 16, then we take out this little 1490 level, then you can say that the buy the dip action's back on. All right. So that's how the VIX is looking. Let's go and take a look at some of the currency action. We all know the dollar has been getting weak. It's gotten a hit ever since it was not able to break and hold above this 83.50 level, and it fell off this little high base flag action that was trying to form right here. You got your little up move, a little sideways consolidation that was not able to hold up, and then we, of course, a failed pattern leads to a fast move in the opposite direction. That's exactly what we had off this nice little bull flag action that was setting up right here. All right, and then right now the dollar is at support. So we'll just continue to gauge this action to see what happens with the dollar. If you take a look at the euro, again, I was not able to do a weekend review video, so I want to kind of touch base with you guys with everything that I'm seeing. that's going on. The euro actually is bullish. All right, the euro did get that break down below that 130 level, but was not able to hold below it, and we've been rallying ever since. And now the euro's back above this little resistance we had back here in April. So the euro's bullish. The dollar's weak. Another thing that I've been noticing is that the euro is not trading correlated with the euro is not correlating with the equity markets now. It's more or less the equity markets. Sorry, I said that wrong. The equity markets are not correlating with the euro now. It's more or less the equity markets are more or less correlating more with the dollar, and they're trading. It looks like it's trading inverse, has an inverse correlation with the euro. And of course, you guys know that was not the situation before, but that's how it's starting to look right now. And just something that we like to watch to see how that affects some of the different sectors and how money starts to rotate through the different sectors. And that's pretty much what I'm pretty good at, is looking at how money rotates to the different sectors and calling out the different sectors before the mainstream or before other investors and traders spot the money rotation based on different stuff that I've been taught to do. So the euro's looking strong. The dollar's looking weak. Let's go and take a look at the commodities, because the precious metals have been dead money. I mean, I've been telling people to stay away from the precious metals, and they still like to trade them. And, they're tradable, but it's tough. 'Cause, I mean, just look at gold. It's not doing anything. So why trade something that has a small range, and then some of the underlying stocks that move on the way this thing trades, on the way gold trades, they got to have that momentum to get that nice little range that they're used to, or that people are used to. So if gold is trading in a tight range, then the gold miners are not going to trade in a good range, or the silver miners aren't going to trade in a good range if the precious metals are weak. So that's something to keep on. That's something to keep in the back of your head when you're looking for the different stocks to trade that are in play. So GLD, pretty much flat day. It gapped down a little bit, but traded sideways. Didn't really do anything. You could tell by just the way the candle is here. There's no action there. I mean, I had a 54-cent range on a dollar on on an ETF that's more than $100. So nothing there. Let's take a look at the GDX. The gold miners, they were pretty much flat too. Same thing. I'm pretty sure this whole precious metal sector is going to get some good action starting tomorrow, or definitely by Wednesday, depending on what the Fed announces and what they say. So definitely, you may want to keep an eye on it here going into tomorrow, because you probably expect some volatility in the precious metals based on what they say about inflation, and about what they want to do with the quantitative easing stuff. So maybe now's the time to keep them on your radar for the next coming days, see if they do anything that provides any good opportunities. So we'll be keeping an eye on those here tomorrow and Wednesday to see if they move. And if they move tomorrow and Wednesday, and then come Thursday, Friday, or come next week they're dead again, then that definitely tells you to stay away from them. So SLV, silver was down 23 cents. Same thing. Precious metals, no action there. Dead money. Let's go ahead and take a look at copper, because I did not get a chance to take a look at copper over the weekend. Copper is not trading that strong either. Copper's having a tough time trying to get back over this little range right here. All right, or better yet, from this above this 330 level here. All right, and until it gets back above 330, I really can't get bullish on copper. I'm most likely it's probably going to trade sideways to lower. You got to think, after it consolidated in this little range for the past 1, 2, 3, 4, 5 weeks, after this nice little strong up move off the lows, it has not been able to catch a bid and move higher. That kind of raises a red flag. All right, and if you're looking for ways to play copper, I mean, mainly two stocks you could take a look at: FCX, all right, and you could take a look at FCX, and you could take a look at SCCO. Those are two copper stocks that trade pretty decent, that we like to watch when we're looking to take a trade, because we see copper strong, or we see copper weak, or something like that. For example, like natural gas was strong this morning. You could take a look. Let me drag this over real quick, but take a look at natural gas. Crude's been strong, which we're going to cover that. We talked about crude getting strong. We nailed that, all right, to the T. And now natural gas was strong this morning from overnight, and it continued through the day. So what did we do? We took a look at some natural gas stocks like CHK, CHK, SWN, and they did provide some decent intraday opportunities. I mean, take a look at CHK. Well, not that much, but there was some action there to be had. Not that much in CHK, but you had SWN, which traded a little bit cleaner. All right, gave you a nice little momentum move in the morning, a nice little continuation action that tried to play out a little bit, worked a little bit, but then that news came out again at 2 o'clock and it sold off. But either way, these are different ways that you generate trade ideas in the morning. When you see a different sector moving, you try to look for ways to participate in it via a stock or something. So back to what I was saying though with the commodities. Let's take a look at crude oil. Crude oil, has been getting that bullish action that we've been tracking. And now, if it could get a couple of closes above 98, we may be looking for crude oil to start making its way back above 100. Again, obviously, as consumers, that will not be good for us because we're going to be losing some of our discretionary income that we like to spend on Starbucks coffee, on going to the movies, buying clothes, different stuff like that. So we definitely want to see crude come down. But as traders and investors, this may give us a nice opportunity to participate in possibly a strong move that could be coming to the top side in crude, whether it be because the economies are growing across the globe or whether it be because the tension in Syria is rising or overseas. Those are different things that could come into play that we got to watch. So either way, crude oil, is holding that nice bid. Remember that rock solid level that we were tracking over the weeks, that 92 level. That every time we sold off intraday, they were just buying it right up. That action kind of gave us a clue that this crude oil is really ready to go. And ever since it broke this little downward trend line right here, it's been taking off. And now, it has a possible inverse. All right, has a possible inverse head and shoulders action that could be playing out here, especially since the nice little downward channel action that we had that formed the little head right here. Okay, so that's something that we're watching. And what else? Anything else I wanted to go over? I went over the commodities, went over the indices, went over the currencies with you guys. All right, let's go ahead and take a look at some stocks. Starting off with Apple. I like to start off with Apple because the tech stocks were good today, and I want to see how Apple did. And Apple did absolutely nothing, and the tech sector was strong. So what does that mean? Apple's not in play right now. You want to be looking at different things. So what are we looking at? Told you guys to look at Amazon, 2 weeks ago when it broke this nice little downward bullish channel. What was the clue that this was going to make a nice move to the top side? It was actually starting to hold a bid. Well, the clue was once it broke the middle 50% part of the channel from the lower end of the channel, and it came back and it held the 50% of the channel. All right, this is something that I teach in my channel trading course. If you're interested in that, please make sure you email me at ccooper@wallstreettrading.com. All right, now we broke out over the resistance trend line. All right, from my little channel range. All right, after we held that nice little 50, giving us a nice little clue there was some type of bid in this stock. Nice little tight range underneath the resistance. We broke out, we pulled back, the retest held, and now we're making our way back up. And Amazon was another stock that this morning we told everybody in our chat room, our mywallstreettv.com chat room. If you have not been there yet, we told you guys to check out Amazon. So some of the traders in the room were trading this stock. Another stock that was trading pretty good today was FSLR. It traded pretty well in the morning. Had some nice bull patterns that were following through. Obviously, you can see here it was not able to hold up, but it provided some decent opportunity in the morning session. All right, you can see here on the 5-minute chart, strong out the gate, nice little tight flag consolidation. Boom, breakout, and gave you a nice little trade. So this one was a decent trade that we were able to participate in the morning here. And then now that I look at a couple of the other solar names, they're looking pretty good as well. Only a couple of them though. CSIQ. All right, this is one that I know looks pretty good. Keep an eye on CSIQ. CSIQ looks good if it could break it and hold above 1050. I don't think LDK looks good. This is a cheap one. TSL's back above one of our resistance zones around this 538, 588 level, 60 level. So if it can hold above 588, look for this to start continuing its way to the top side. If you take a look at the 60-minute chart, let me take off the extended session here. You take a look at the 60-minute chart, it's potentially setting up a little Bible pullback where it could be bought up for a morning trade tomorrow. One thing I don't like is, how it was not able to hold like kind of like a high bid above 630, and it had a little bit more of a deeper pullback than I would like. But if you think about it, from the gap up to the high, it's still holding above the 50% range. So keep an eye on TSL. If it breaks above this little downward trend line, I would say gets back over, say, 635. If the solar stocks are strong tomorrow, it can move. So tech was pretty strong today. You can take a look at Cisco, CSCO. This one made a nice little move today. I'm not sure if they got to upgrade or whatever, but the stock is looking pretty decent. You want to keep an eye on this one for a continuation. Want to keep an eye on this one for continuation tomorrow. We also had some nice action in HPQ. Okay, this one has been one that we've been tracking as well ever since the gap up. It's in a nice little tight range. Keep an eye on this one for when it breaks over 25.50. All right, that one's in a nice little tight range. And what else here? Let's see, ADI. Some of these semiconductor stocks were strong today. You take a look at ADI. ADI made a nice little decent move today. Let's see here, TXN. Texas Instruments. It's all right, nothing too crazy there. Let me take a look at CLAC real quick and Qualcomm. All right, CLAC, nothing there, and then QCOM. All right, QCOM got a little bounce. This one may try to get some action tomorrow. We'll see. The financials, they weren't all that great today. Goldman Sachs, I would say, was not showing any type of strength that much intraday. If you take a look at the 15-minute chart, it opened up and pretty much faded the rest of the day after double topping right here. You had more strength in names like, I believe, Wells Fargo. Not even Wells Fargo. Sorry about that. Let's see here. Let's see here. JP Morgan. Well, I mean, all the banks kind of look the same. They rallied up in the morning, they sold off. You did see some strength in some of the other life insurance companies, some of the other financials like the life insurance companies. You had PRU moving to the top side. We called this one out intraday. Well, I call this one out intraday to my guys in the room, even though this one was not able to play out because that news that came out around 2 o'clock. But you can see it had this nice little fast explosive move off the open. Gave you a nice little range to get involved and traded higher. But then again, that news came in at 2 o'clock and it killed it. If that news didn't come in, this thing probably would have ended up trending high. So keep this one on your radar for tomorrow. PRU, you had some decent action in MetLife. Another life insurance stock, MetLife, has a nice little breakout if you could get above 45.20. Let me take a look at this one on the 60-minute chart. 15. So it's looking all right. Again, if this thing could get over 45.22, it could maybe get some action. We have a little gap up there to 45.60. So the financials were all right. Again, the banks, they weren't all that great. They had some early morning strength, and they just kind of just faded from the highs and just traded sideways a bit. The tech sector is where it was at, though. The tech sector, the energy stocks were looking pretty good. Schlumberger was up over 2% today. All right. Let me take off my channel analysis here. Schlumberger was up over 2% today. Still has a lot of technical damage to try to recuperate because it broke down a lot here. But it has a nice little downward channel. So that's something that we're watching. ExxonMobil. ExxonMobil is going to be the go-to stock, though. These energy stocks start moving. Why? The same little thing here. We have the little break of a trend line. Rallies up, back test holds. Rallies up, then sells back down. Back test holds against the key trend line. Now it's actually not going down to the trend line. Excuse me. I'm trying to talk fast there. Now it's not actually going down to the trend line, but it's actually holding the moving average there. So this one looks good if it could trigger back over 92. Keep it on ExxonMobil. ExxonMobil, again, I like ExxonMobil as long as it holds above this key trend line that it broke here back in May. All right, and that's about it, guys. Hope you guys liked the video. Again, I've been real busy working on this education, so I've not been able to participate that much in our intraday chat room that we have. All right, and at the same time, I've not been on point like I usually am with these videos, but I'm almost done with the education. Actually, tomorrow I should have it completed, and therefore I'll be back in tune. I'll be back in tune with things, and we'll start doing our morning videos, which is actually what I really want to start doing, our morning pre-market videos to show you guys the stocks that we're watching beforehand, so that in the afternoon session video we can touch base on those stocks again and then recap those stocks after the bell market summary. And then I'm going to start doing weekly webinars starting like on Thursday, not this Thursday, but maybe most likely next Thursday, and we'll be discussing different topics. So again, you want to make sure you go to the website wallstreettrading.com to tune in with what we have going on. We have a lot of great stuff going on, and if you're interested in trading with our prop firm, our trading firm, you want to contact me at ccooper at Wall Street Trading. Same thing, wallstreettrading.com. Same thing if you're interested in our education course, which is going to be pretty awesome. So you want to make sure you check it out. Have a great day, guys. Catch you guys later. Cheers.